Hey everyone, welcome. It is we just got the closing bell for September 4th, and it was mostly just a choppy day, and that's really what we were expecting. So the S&P 500, we kind of opened lower and then we traded up, but not that much. We're still down 0.23% from yesterday. We're closing right around 551, just a hair below 551, and that MA50 is holding. So I really do expect that MA50 to continue to hold into tomorrow, and then Friday, depending on how the reports come out for the employment situation, we could get volatility and directionality in either direction, either up or down. It just really depends on how that report comes out. Also, we talked about a little bit earlier how we have Broadcom earnings coming out on Thursday night. So that gives us tomorrow to potentially look for another tail risk trade, because if Broadcom, the potential for it to move upward strongly is low. And if it says anything that is interpreted as bearish for semiconductors and AI, then that could potentially bleed into NVIDIA, SMH. So it will have a wider spread effect. So moving up doesn't have a widespread effect. Moving down potentially has a widespread effect. So that makes a environment where a tail risk trade could look very enticing. So we'll look forward to those two events. But for tomorrow, we're really not looking for anything too much different than today. So we have a directional move this week. That was yesterday. It was quite directional. It moved 11.60. The ATR is 7.74. So about 1.5 times the normal ATR. So you can see that most days stay contained within ATR. It's pretty rare that we move more than one ATR. Even more rare that we move more than one ATR in a single week. Although this week it's possible because of that employment situation. We do have a catalyst this week for getting a second larger than normal one ATR move. So could we get three? That would be highly unusual. So just by the process of elimination, it's almost assured that tomorrow will just mostly be a day like today, probably non-directional. And then we have the potential for volatility and directionality on Friday. So let's take a look at what happened to our VIX, because that's going to be most telling right now. And our VIX is still elevated, still above 20. Looks like we ended at 21.08. That is going to make for a negative environment. So starting to lean more bearish. And if we look at the S&P 500, we're sitting on top of that MA50. And if we do crack below that MA50, whether it's tomorrow or more likely on Friday or sometime next week, that would not be very good news for the markets. That would be at least a signal to start moving even more bearish, not completely bearish, but even more bearish. And that has the potential of moving us downwards towards this MA90, towards this quarterly VWAP. And then we'll see if we get enough support if we move that far down. What we were talking about earlier this morning is that if we start making a lower low over here, even if we bounce a little bit and then make a lower low, that still doesn't look very good for the overall markets. So we just have to be very careful. There's more potential, there's more risk to the downside than there is to the upside. That's still true. It's actually even more true than when I was saying it over the last 2 weeks, because now we're flirting with that MA50. If we look at the QQQ, we've already broken below all of these moving averages, and we're now flirting with the quarterly VWAP. And if we move down from there, then we're looking at that MA200 region. And SMH, we already moved below this morning. We got below the annual VWAP and we traded up, but we closed right below that annual VWAP. That's going to probably be some pretty heavy resistance. We do have the MA200 right below us though, so we could get sandwiched and just chop sideways. But again, with Broadcom reporting on Thursday night, we do have the potential of a more of a potential of a downside move of breaking that MA200 than we do of breaking this quarterly VWAP. So we'll be watching that very carefully. Again, we may consider a tail risk trade. This time, however, I might probably do it directly in the AVGO rather than inside of SMH, or maybe one of their competitors, like maybe in NVIDIA rather than an entire sector. You can see that NVIDIA is in a similar boat, cracked below the quarterly VWAP, and then it did trade above it, but was not able to sustain. So that's still very negative for NVIDIA, the difference being that it is still above its annual VWAP. And I'm not going to make too much of that MA150. So it could fall and get support here, but that's still pretty far distance for it to fall. And in that case, we'd be matching a lower low, and we'd have to see, or not matching a lower low, matching the low instead of making a lower low. And we would have to see if we could fall through below that to see if we would get really negative on the stock and the sector. That would drag down the QQQ, start dragging down the S&P. It could have a whole chain effect, whereas moving upwards doesn't really have that same chain reaction. So that's why we're saying that there's more risk to the downside than there is to the upside. So we just want to be very careful this week in particular, employment, especially after the employment situation. And then next week would be 6th, 13th, and then we have another week and a half before we have the rate cut decision. So probably the most likely scenario is that we don't get, unless we get a shock from the employment situation. If we don't get a huge shock from the employment situation, then the most likely scenario is that we start to chop sideways into that the rate cut decision. We are already thinking that when we were up here. It's just that now we might just chop at a slightly lower level than when we were seeing over here. So, and of course, if you take a broader perspective, we could just call this one big box. 18th. Okay. So we'll see. So I kind of doubt that we will break below the MA50 for sure tomorrow. Not for sure, but I really, really, really doubt we'll break below that MA50 tomorrow. And then the employment situation, depending on it, really, it's 50-50. I can't really comment on that. But if we don't break below this box or that MA50, then we're probably just chopping in this range until we get to that rate cut decision. So that would look like from a wider perspective, this was highly directional and mostly momentum. And then we had a pullback, and then we got momentum back, and then we got a correction, and then it looked like we were getting momentum, but then we stalled out over here. So this right here, this sharp movement down, a sharp recovery into a consolidation or this sort of roundish spike right here, or peak, that is it is more indicative of the end of a momentum market and the beginning of a mean reversion market. So what I mean by that is, let's see if we can find something similar. Okay, so not quite similar, but you can see this is up, down, a sharp movement upward, and then a rounded movement downward. And from there, we no longer had that momentum upwards anymore. Now we mean revert. Now we mean revert. Mean revert, okay, on the way. And then that generally is associated, since this was a change of trend, then that became a downtrend. And that was 2022. Let's see if we can, this is similar, but we didn't recover nearly as much on the way up. This is similar, sharp movement down, sharp movement up, sideways consolidation for a while, and then a movement downwards. This one didn't change trend. It continued the trend upwards, but it took a really long time to get to that high, to match that high right there. And then over here on a much wider scale, you get that rounded top. And then I think you get the idea. So generally what we're seeing right now is a topping pattern, or at least the change of the momentum in the market, so that if we do recover from here, just say we come down and we bounce off of that quarterly VWAP or that annual VWAP or the MA200, when we go up, we just won't expect it to move up with nearly the same speed and directionality. And then it could roll over and change to a bear market. Like we saw earlier, it doesn't have to, but it could take a while before we hit those all-time highs again. And in the previous example that we saw, once we hit those all-time highs, once we match those all-time highs, that was when we actually changed trend. So what we're saying is that the potential for a continued upward movement is low, especially since we're starting to get into the election season. We're supposed to have a debate on the 10th, and now the news cycle is going to start focusing more and more on the US elections all the way until the elections are over. So the likelihood of us getting super directional before the election cycle is unlikely unless so to the upside, there's nothing that I can think of that would do it unless the Fed for some reason cuts 50 or 75 or 100 basis points, like they do something out of left field and they just cut like crazy. So even a 50 basis point, I don't know that it'll really send it up for long term. So it'd have to be a 75 basis point cut, and that would be super unprecedented and completely unjustified at the moment, given where we are in the market. So there's really nothing to the upside, but all sorts of things could send us downwards independent of the election cycle. So the worsening situation in the Middle East, worsening situation with Russia, Ukraine, the economy just falls, the GDP or consumer confidence just completely collapses. There's the Japanese carry trade comes back and bites us in the butt. There's a lot of things that could send us downward. But again, the more likely situation is that more of a chopping sideways motion into the election until it becomes really clear that one candidate or the other is leading. So for the most part right now, we just want a lot of caution. We still want to maintain mostly neutral in our portfolios, although at this particular point in time, we can lean slightly bearish, not full bear, because full bear would mean we're in a downward cycle in the market, which we aren't. We're still near all-time highs. So we just have a slight bear or bias in our portfolios, or we just completely neutral. So tomorrow we'll be looking for possibly, as long as the setup still feels right, for a tail risk trade to play off of AVGO earnings or Broadcom earnings, which may or may not be, we may or may not go as broad as SMH. SMH looks like a good short just because, although that MA200 is pretty close by. So we may go into AVGO, or sorry, SMH, but most likely we'll stick to a tail risk trade in AVGO if we do anything at all. I think we did some trades in option strat. I completely forgot about them. I don't even remember what they were. Fortinet did not do great today. So we were looking at the strong tech stocks yesterday in case there was a bounce. We didn't get much of a bounce. I mean, we stopped. We see it gapped down and then we traded. We're still down on 0.26. That's why Fortinet didn't get a nice huge recovery, although it's not that bad, right? It's only down 0.34%. It's just the option kind of looks a little inflated. We may have wide markets. That's something else that happened today. The bid-ask spread was wider than normal during market hours. And so you're seeing that there's just more and more uncertainty creeping into this market. So we have to be very careful with our options trading, just knowing that those markets are starting to widen out. And just because they're tight when we get in doesn't mean they'll be tight when we're trying to get out, and we could have trouble getting out. So we just want to make sure that we stay in those really liquid names. So at this particular moment in time, I am personally only going to be trading S&P 500 stocks because they are more likely to have that liquidity and not have that spread widen out too much although there's still that potential for it. They could still have that happen to them. So really, we're just looking for those most very liquid names, the ones that are still trading, even though in this muted environment where the S&P 500 is trading below average number of shares or right at average number of shares, which is already a lowered muted average. We just want to find names that are still able to trade at least 1 million shares a day, that are still at least kind of near their moving average. That way, it's less likely that we'll get caught by a widened out bid-ask spread when we try to close our positions. So an example might be, I'm just guessing, maybe Apple. Yeah, so you can see Apple is pretty close to its moving average on the last several days. Today, I can't see. Yeah, today's pretty close. By the time we get dark pool stuff in, we might be closer. So you just want the really, really liquid ones right now. Otherwise, you may get caught. You may end up being right about the stock and about the performance, and it might even be really significant. And you might be right about the mark. So the midpoint of when you bought and the midpoint of when you want to sell your option. But just because the market maker says, hey, I don't want to do it at your mark, he might insist that the only transact at the market maker's bid level, in which case you might end up just making a very small amount of money or even losing money if the markets are super wide. So just be careful of that. That's another thing to be aware of. Okay, so that's it for this morning. We'll just probably look at a choppy sideways movement tomorrow, and then we'll see what happens with Broadcom earnings and the employment situation. Have a wonderful rest of your day, and I'll see you tomorrow.